Hi everyone, Andrew here. I'm asked on a fairly regular basis whether it's appropriate or not to invest in property. Now I understand why people ask the question. We get property as a nation, we're a nation of home lovers. We've either bought and sold our homes or we're renting them, so we understand how it works. And properties are a tangible asset we can physically touch and which gives us a sense of security and an understanding. Whereas the stock markets can seem more mystical and complex, and so it gives us a bit more trepidation when we're investing, particularly when we tend to hear on the news at times when the stock market crashes, we don't hear about those long-term compound returns. But there's a number of reasons why I would always elect to invest in the stock markets and other liquid assets as opposed to property. First of all, you can expect better long-term returns from the stock markets compared to any other asset. Yes, when they fall, they can fall quite rapidly, but the truism of investing is if you want greater returns, you have to accept the greater risk. And the mistake people make is when the stock markets fall is to get out of it. Those who succeed with investing in the stock markets are those who stay invested with patience and discipline and benefit from that compound interest over the long term. Another reason why I don't like property is at the moment HMRC seems to not like property investors either. You're taxed more when you purchase a property through higher rates of stamp duty. It's no longer possible to get full tax relief back on mortgage interest payments when you offset them against income from buy-to-let properties. And when you sell your second home, whether it's a buy-to-let or a holiday home, you have to pay higher rates of capital gains tax as well. Whereas if you're investing in things like pensions and ISAs, they're much more tax efficient, so your money's working much harder for you. Property is also a liquid asset, which means it's very hard to sell. If you've been through the property purchase and sale market, you know how stressful it can be. And you might need money at a particular time, and it might take you many months before you can actually sell a property to get that money back. You can't just sell a brick. And yes, of course, you could borrow against a property, but that comes at a cost. As a minimum, there's probably mortgage arrangement fees, but also any money you borrow, you'd have interest to pay back, which is going to reduce the returns you're getting from the property through growth and income. And there's also the hassle factor. Landlords have to deal with tenants, and I know through experience when I was a tenant what that means for landlords. Yes, you can use a managing agent to find tenants and manage tenants, but again that comes at a cost which reduces the returns you get. So it's for those reasons that if I have spare capital to invest, I'll always look to the global stock markets and other major investment markets that are liquid and would provide a better diversified return than I would through the UK property market. So I hope that answers the question if it's one that's been you posed to yourself, and do watch more videos where I'm answering more of your questions. Just look on my YouTube channel and see the questions and answered playlist there.